All right, everyone, get ready, because today we're diving deep into a topic that can be a bit of a headache for business owners here in the UAE. Deemed supplies under the UAE V8 law.
Oh, yeah. Deemed supplies, they can be a real curveball if you're not careful.
That's why we're here to break it all down and hopefully save you from any unexpected VAT surprises.
Exactly. No one wants to end up owing more V8 than they bargained for.
So let's start with the basics.
Yeah.
What exactly are we talking about when we say deemed supply?
Well, it's a bit like a legal fiction. The UAE V8 law basically says that even if you haven't technically made a sale, certain transactions are treated as if you did for tax purposes.
So even though no money might have changed hands, you could still end up owing VAT,
You got it. And this can catch a lot of business owners off guard.
especially if they're used to thinking about VAT in terms of traditional sales transactions.
Right. So let's dive into some specific scenarios to illustrate how these deemed supplies can actually play out in real life.
Perfect, because I think examples are always the best way to wrap your head around this stuff.
Agreed. So let's say you're a generous business owner and you decide to reward a top-performing employee with a brand new laptop as a bonus.
Sounds like a great way to boost morale.
Definitely. But here's the thing. If you claimed back the input VAT on that laptop when you initially purchased it for your business, giving it away for free triggers a deemed supply.
Wait, really? So even though it's a gift, the UAE VA tile sees it as a taxable transaction.
Yep, it's like you've suddenly used that laptop for personal reasons, even though it was intended as a reward for your employee.
Okay, so gift giving can be a minefield when it comes to V8.
Yeah.
What else should business owners be aware of?
Well, another common situation is moving goods between the UAE and other countries that also have VAT in place.
So cross-border transactions can get tricky too.
They sure can. Depending on the specifics, transferring goods out of the UAE or bringing them in could trigger a deemed supply.
Got it. What about situations where something was initially bought for business use, but then gets used personally? Like the classic example of a company car that an employee occasionally uses to run errands.
Ah, the company car dilemma. That's a textbook example of a deemed supply of a service. If you've claimed input VAT on the car's expenses, like fuel or maintenance, and then you allow an employee to use it for personal reasons, you're essentially providing them with a taxable benefit.
So even something as seemingly harmless as letting an employee pop to the grocery store in the company car could have a VAT implications.
Absolutely. The key is whether you initially reclaimed input VAT on those goods or services.
All right, so we've covered gifts, international transactions, and personal use of business assets. Anything else our listeners should be watching out for?
Well, there's one more scenario that's worth mentioning, and that's when you decide to deregister for VAT.
This is a big one. What happens to all your stuff when you close up shop and deregister?
In a nutshell, the UAE V8 law treats all your remaining goods as a deemed supply on the date you deregister.
So it's like a final V8 hurdle you have to clear before you can shut down your business.
Exactly. But don't worry, it's not all doom and gloom. There are some exceptions to these deemed supply rules that can help you avoid those unexpected VAT bills.
Oh, thank goodness. Tell us more about these exceptions. What are the lifelines here?
Well, the first one's pretty straightforward. If you never claimed input VAT on something in the first place, you don't have to worry about deemed supply later on.
That makes sense. It's all about whether you got that initial VAT refund.
Right. And the second exception is if the original supply was exempt from VA. So if you bought something VAT free from the start, you're in the clear.
Okay, those exceptions definitely take some of the pressure off, but how do these rules actually play out in a real-world scenario?
Let's imagine a desert safari company. We'll call them Khalid LLC. They decide to invest in some top-of-the-line filmmaking equipment to capture those stunning desert landscapes. They buy 10 cameras, each costing AED 60,000, excluding VAT, and being a smart business, they claim back all the input VAT on those purchases.
Sounds like they're setting themselves up for some amazing marketing material.
You bet. So they've got their cameras, they've claimed their VAT back, everything's looking good, but then they decide to give one of those cameras to a hardworking employee as a thank you gift.
Oh, I see where this is going. That generous act could trigger a deemed supply.
You got it. And because they claimed the input VAT on that camera initially, they could end up owing VAT on the gift.
So essentially, they're being taxed on their own generosity.
In a way, yes.
Yes.
And to make matters more interesting, the value of that deemed supply is usually calculated based on the original cost of the camera.
Wow, so that's a potential VAT bill of AED 3,000 on a gift. It really highlights how crucial it is to understand these nuances.
Absolutely. Now let's flip the script a little bit. Let's say Khalid LLC also bought a bunch of office supplies, but they never claimed the input VAT on those.
So if they decide to donate those supplies to a local charity, would that be considered a deemed supply?
Nope. Since they didn't claim the input VAT initially, there's no deemed supply to worry about. They're in the clear.
Interesting. So it all comes down to that initial VAT claim.
Okay.
So we've covered some major ground here, but there's one burning question that I'm sure is on a lot of our listeners' minds. What about client gifts? Are there any limits on how much we can spend without triggering a deemed supply?
Thankfully, yes. The UAE VAT law actually has a small gifts rule. It states that if you give a client a gift worth less than AED 500 and you haven't spent more than that on gifts for that specific client over the past 12 months, you're in the safe zone.
So you can still show your client some love without worrying about getting hit with a deemed supply.
Exactly. But you've got to keep track of your spending throughout the year to make sure you're staying within that limit per client.
This is all incredibly insightful, but I think it's time for a quick recap, just to make sure everyone's on the same page. Deemed supplies are a real thing in the UAE, and they can pop up in a variety of situations, from gifts and personal use of business assets to those cross-border transactions.
And while they can definitely lead to some unexpected VAT bills, understanding the rules and especially those all-important exceptions can help you navigate this complex area of VAT.
It seems like record keeping is absolutely crucial here.
Absolutely. You need a solid system in place to track all your purchases, input VAT claims, and how you're using goods and services.
It's like having a V8 safety net.
You got it. And when it comes to deemed supplies, those detailed records are your best defense.
All right, everyone, we've covered a lot of ground today, but we're not done yet. In the next part of our deep dive, we'll explore even more intricate scenarios and really unpack what happens when you decide to deregister for VAT. So stay tuned for more deemed supply adventures.
And in the meantime, remember this is just for informational purposes. Always consult with a qualified tax expert for advice specific to your business.
Great advice. We'll be back soon with more insights into the world of UAE VAT.
You know, it's interesting when you think about it. Deemed supplies really kind of force us to rethink what a sale really is.
Yeah, that's true. It's like the UAE VAT law saying, hey, we know you might not have gotten cold, hard cash for this, but we still see it as a taxable transaction.
Exactly. And it makes you wonder, why even bother with all this deemed supplies stuff in the first place? Why not just keep VAT simple and focus on those straightforward sales?
That's a great question. Why add this extra layer of complexity for businesses?
Well, I think it comes down to fairness in the VA system. Deemed supplies are there to prevent businesses from kind of gaming the system and getting away with not paying VAT when they really should be.
Okay, so it's like a safeguard to make sure everyone's playing by the same rules.
Precisely. Imagine a business buys a luxury car, claims back all that juicy input VAT, and then the owner just uses it for personal joyrides. If there were no deemed supplies, they'd be getting a nice little VAT advantage over other businesses who use their vehicles strictly for business purposes.
Yeah, that wouldn't be very fair. It'd be like giving one player in a game an unfair advantage.
Exactly. Deemed supplies help level the playing field and make sure VAT is applied consistently regardless of how those goods or services are actually used.
So it's all about maintaining fairness and closing those potential VAT loopholes. Okay, so as we wrap up this deep dive, I want to leave our listeners with something to think about. We've talked about how deemed supplies are all about fairness in the VAT system, but, the business world, it never stands still.
You're right, things are changing all the time, especially with trends like the sharing economy, remote work, all those new business models popping up left and right. They're kind of blurring the lines.
Yeah, exactly. They make those traditional boundaries between personal and business use even fuzzier.
And that makes these deemed supply rules even more crucial because, it can be tough to figure out where that line is.
It's a real challenge for tax authorities to keep up with the way business is done these days. It'll be interesting to see how those VAT rules adapt and change as technology keeps moving forward.
Definitely something to keep an eye on. But for now, let's bring it back to the here and now and remind everyone that what we've discussed today, it's just for informational purposes.
Right. We are not qualified tax advisors, so don't take this as professional advice.
Every business is different. Every situation is unique. Always best to get personalized advice from a qualified tax pro.
Great advice. Now, we want to hear from you, our amazing listeners. What were your big aha moments from this deep dive? Anything surprise you? What questions are still swirling around in your head?
Head over to those comments and let us know.
And hey, who knows? Maybe we'll feature your question in a future episode.
Until then, stay curious, stay informed, and stay VAT compliant, everyone.
We'll catch you in the next deep dive.